G'day everyone, welcome back to another commodity update, and today we're looking at the charts for these instruments or these commodities, and they're all showing bullish momentum mainly on longer term, but they're hitting, most of them are also hitting a bearish divergence. So I'll have a look at the charts in a moment. But first, in terms of the outlook, as of today, July 24th, copper outlook remains bullish. Goldman Sachs expects prices near $98.90 a tonne for the second half of 2025, peaking in August, then easing towards $97.00 by year end. Support comes from tight supply, robust electrification demand and inventory drain, though near-term volatility persists due to macro and tariff risks. Iron ore prices holding in around $96 to $102 a tonne range, backed by resilient end-use demand and Chinese policy reforms capping inefficient steel capacity. UBS projects $100 a tonne average in 2025, though supply growth and subdued steel demand limit upside. Spot gold trading as a safe haven amid geopolitical and tariff uncertainty, volatile through late July but generally supported by risk offloads, with analysts noting continued investor interest. Silver outperforming gold in 2025 with around 36% year-to-date gains, hitting $39.40 an ounce, the highest since 2011 on tight supply, industrial demand strength and elevated lease rates. Analysts see $42 an ounce this year and potentially $45 an ounce next. For platinum, forecasts hovering around $1,650 to $1,700 through 2025, with subdued demand but stable forecasts around monthly averages of $1,688. Crude oil market remains range-bound amid balancing supply discipline from OPEC, weak US demand and rising inventories. JP Morgan projects Brent at $66 a barrel for 2025. Technicals lean bearish with sell-on rallied sentiment. Quick take, most markets are broadly stable to bullish. Copper, iron ore, silver and gold are underpinned by structural defensive demand and policy tweaks, while crude is stuck in neutral to bearish range awaiting clearer macro signals. So starting off with high-grade copper, we always look at the long-term trends first. So at the monthly here, showing a bullish momentum. It's broken above this previous resistance we had at 53.953, and the CCI is also bullish, so bullish momentum on the monthly. Now we did have a bearish divergence back here to that peak there, the same point there on the price chart, and that actually broke down, hit our minimum target range. Now since then the price has retraced to the upside, so there's no more divergence to consider there on the monthly. Also notice this fair value gap down here, which unfilled orders, so again just be wise of that. We don't trade that, but at some point the price may very well come back down towards that area. On the weekly, we've got a bullish momentum as well with the CCI and the price above the moving averages, and there's no divergence to worry about there. But notice again these fair value gaps, and the closest one is this one here, identified by that light blue area, and the price will very likely break to the downside there in the near term on the weekly. On the daily, what we're looking at here is again bullish momentum with the price and the CCI broken above the moving averages, so long positions only. However, if you look here in this little range here, we've got some fair value gaps that haven't been filled yet. Those two there, and if I extend it right down to this one here, that there is also a fair value gap which hasn't been touched yet. So at the very least, we expect these to be touched in the near term, very near term, and possibly even retrace back down towards this area here. So I'll keep an eye on that. There's no bearish divergence at the moment, so nothing really to consider there. But again, we look at the trends with the moving averages as a primary indicator. So if you're trading on the 1 hour time frame, we always go in the direction of the daily, as you know. Now on this one, on the 1 hour, you'll notice here we've got slightly higher highs on the price versus lower highs on the CCI. That's a bearish divergence. And again, notice here we've got a fair value gap on the 1 hour time period as well. So very likely going to see the price retrace to the downside. At the very minimum, these bearish divergence, or these divergence, we can expect the price to retrace 23 to 38%, and I'll mark it with a blue area. That there, and that's our minimum retrace level. But again, just be wise of this fair value gap. We might see it come back down towards 100% retrace if it does execute towards that range there. Now in terms of let me just get rid of the Fibonacci to clean it up. In terms of a back test, we've got here the stop loss approach and the average down approach. Now the stop loss approach was losing initially when the price was declining. This is going long only for both of these strategies. Made a few dollars here, but at the end of the day, it's actually below our baseline of 100,000. So you're down about almost $800 on that one. On the average down, you notice there each of these little steps indicate how many times you've averaged down and you've added to your positions. And had you been going long during this whole period, it would have generated about $53,000. Now, I'm not suggesting you do that. Again, follow my analysis in the description below in terms of the trading strategies that I've covered recently. So we trade in the direction of the daily, but we also look at any breaks to the downside. Say, for example, more recently on the daily, you would have gone long there with that candle, and you would have closed it out at the very latest on that candle there once that CCI broke into the moving average range. So that there would have been, you might have had a couple of trades in that range there. Going back here as well, gone long there based on the daily, and you would have closed it out at that point there. Again, also notice as well, the other area you get out of trades is looking at these bearish divergence. So you can see there, we've got lower highs on the CCI versus higher highs on the price. The price retraced back down. As soon as you see a lower high on the CCI and you're in profit, you get out of the trade. Another bearish divergence there, going long. As soon as you see lower highs on the CCI, get out of the trade there. That's how you trade those little divergence areas. So for iron ore on the monthly, that's still showing bearish momentum. It's below the moving averages. No CCI for it drawn there, and there's also no fair value gap to identify in the short term. On the weekly, we've got bullish momentum on the price chart as well as the CCI. We do have a fair value gap there, which I'll highlight. So very likely we're going to see the price retrace back down to that level. You can see these ones here have been filled with the action of those candles. And likewise these ones, and even this one back here has been filled. So always pay attention to those fair value gaps. But at the moment, bullish momentum, no sign yet of a reversal on that one. We always look at the lower time frames as well for any reversal signals. On the daily here, again, bullish momentum on the CCI as well as the price, not nice big move. Again, there is a fair value gap there. It's been about 25% filled with a wick of that candle. But again, we may see the price retrace back down to fill the remaining portion of that in the near term. On the 1 hour time frame, before I go to the back test, let's look at the 1 hour chart in isolation. So again, what we're looking for here is any divergence. So here you can see there we've got lower highs on the CCI versus the same period, higher highs on the price. That's a pretty massive bearish divergence. I'd like to see that price break a lot lower below that moving average range to see any potential, I suppose, start of a reversal, because you could just be touching that range and then bouncing out of it again. And so long as that price keeps rising and the CCI keeps falling, we're going to consider that a bearish divergence. But as soon as that starts breaking below and that moving average range starts bending to the downside, I'll draw a target for it now. But again, it's a bit too early to call it. And we take it back to the significant low before that divergence started, to that point there. You can see there it's not far off hitting the minimum target range. So all it needs is a bit more to touch that range to then effectively execute that. Now there's no saying where it's going to stop. It could actually just bounce off that range, or it could go a lot lower. And that's why the next thing we look at as well is for any fair value gaps in the smaller time frame. And you can see there we've got a couple of fair value gaps that haven't been filled in that range there, and that coincides with that divergence target range as well. There's no fair value gaps back here that I can see, so it looks like it could just be a small retrace before bouncing again. But at the moment, bearish momentum on the hourly, so be cautious about going long if you're trading on the hourly, even though the daily is showing bullish momentum. I'd like to see the price and the CCI break to the upside on the hourly. Now in terms of the back test, here we've got the stop loss approach and the average down approach. So had you been going long, well, you would have taken long positions from that point there on that candle when the CCI and the price broke above the moving average ranges. The stop loss approach had a few good trades, and that's generated so far about $30, and the average down approach has generated $115 executing single contracts on that one. So for spot gold on the monthly, we've got a nice big exponential rise on the price above the moving averages, and it looks like it's still going higher, although it's actually consolidating in that little range at the moment. There's no CCI for it, but do notice these fair value gaps down here. Again, we don't trade these based on that alone. We look at the other indicators and primarily these moving averages and how they're performing with the CCI. So bullish momentum at the moment on the monthly. On the weekly, however, we've got a break to the downside on the CCI. So bearish divergence versus higher highs on the price. Now that price is consolidating in that range. We've drawn a target range there in terms of a 23-38% retrace level. So we may see the price drop off. That CCI still dropping on the weekly. I'd like to see that break higher. So also I'd like to see the price break higher as well to be more bullish, but at the moment be very cautious about buying based on the weekly. On the daily as well, notice here we had another bearish divergence. These are all independent, by the way, different time frames. We had a bearish divergence, and that CCI is still dropping off versus a consolidation of that price up in that range there. So always pay attention to that. Very undecided at the moment, so probably best to stay on the sidelines and don't trade until we get a more conclusive move to one way or the other. Now if we go to the 1 hour chart, look for any micro moves. So if you are trading this, and you at the moment, if you are trading it going long, a couple of things to notice on the daily is you've got this fair value gap. That's just been touched at the moment as we speak with the wicks of those candles, but hasn't been filled totally. This one up there has been filled with those candles, and these ones back here have been filled primarily with those candles as well. So at the moment, just be cautious. We might see further downside based on that only. Again, I don't trade that alone. I'm just looking at it as a potential area for a reversal. On the 1 hour time frame, however, you do see we've got a bearish momentum after this bearish divergence, and that has actually come back. Let's draw a Fibonacci on that. You can see there it's broken down past the 38% range. So if I was to draw a target range there, it's already broken through that range and currently sitting around the 38% level. It could go a lot further. That CCI is still dropping, so just be cautious. I wouldn't be buying gold at the moment. Just be aware of that. Now, looking at the back test for this, this is the long position. So what I've done here on the long positions, I've started from about the 24th of June, which goes back to this period here. So now, again, I'm just showing you both. I'm going to show you the short positions in a moment, but here's going long. So I'm not telling you to do this. This is against the rules. But again, if you're going long during this period, you would have taken long positions only based on the CCI breaking above the moving averages, as well as the price. So you can see there the stop loss approach has generated about $850, and the average down generated $4,100 approximately. Always pay attention to the daily, as I said, and also these divergence. In this case, you would have been going long, and that divergence helped play out that position there. There was another bearish divergence here, so going short, you would have closed out your positions once that broke below the moving average range. In terms of the short positions, that's also been doing quite nicely. One little trick as well, generally when the price consolidates, and again this started from the 24th of June as well, generally when the price consolidates on the daily, then both long and short positions can be taken with these approaches. But again, I advise against that. I'm just telling you what the back test is showing. So the stop loss for the back test has shown $400 going short, and currently about $3,500 going short as well. But again, always pay attention to the direction of these moving averages and the divergence as well. So platinum's had a nice rise last month, and so far doing okay this month. On the monthly, you can see there's a big, massive spike above the moving averages, but do notice there's a fair value gap down here. I'll mark that. So we might see a pullback very strongly on that one in the coming, who knows, weeks or even months. This is a long-term play. On the weekly, again, bullish momentum on the price, and also notice here it's bullish on the CCI, but notice it's pulling back towards that moving average range. So if you've been holding that and going long, I'd be getting ready. If in fact, I'd be depends what time frame you're trading. If you're trading on the daily, always go in direction of the weekly, and I'd be waiting for that to break below that moving average range on the price to close out your positions. Probably a good idea to close it out now, actually. Of course, we could see a bounce, but I like taking probabilities where they show it. So bullish momentum at the moment, although it's pulling back. Notice also we've got this fair value gap down here identified. So again, in alignment with the monthly, we might see a massive pullback in the following weeks or even months. On the daily, we've also got this bearish divergence. So again, if you're going long during this period, it might be worth taking your profits off the table, especially if you see that break below the moving averages on the price chart. That CCI is still dropping, so it indicates a potential fall at some point. We did draw a divergence target there. It looks like the price has risen slightly, so just to readjust that, we'd go from that high down to that level and move that divergence to that point there, that 23-38% range. So that's our new target now based on the adjusted divergence range of Fibonacci. Now, it could just stop there and bounce out, or if it does drop, then expect this range to be filled as well. So it could actually come back towards this moving average 200 period. So just be aware of that. I wouldn't be going long at the moment. It's looking too dangerous to do that. Looking at the 1 hour period, let's first go to the naked chart. What we're looking for is any divergence to support the daily. So the daily is showing a bearish divergence. And you can see there, so is the 1 hour time period. So if we look at that spike down to that range there, the same period on the price chart, that was a bearish divergence, and that's already pulled back. And again, to draw a Fibonacci on that range, we take it back to the significant low. You can see there it's easily broken through that 23-38% range, and currently sitting around the 50% range, as we said. At the moment, it's bearish momentum on the hourly, so don't go long if you're trading on the hourly. The daily is also showing your bearish divergence, so again, I wouldn't be going long at this point, taking short trades only. So looking at the short positions, now what I've done here is I've left it in on the 24th of June to show you what the result would be, and again, I'm not suggesting you do this. The profitability for the stop loss approach has been dropping very strongly, and you would have lost over $10,000 on that roughly, or $11,000. The average down has worked okay, although you would have been hit with this drawdown during that period. So always don't go against the daily trend. Again, this is short positions. So at the moment, you would have been going short once that price broke below the moving average range there, and so was the CCI. So you would have started going short from that period. So silver's looking nice and bullish at the moment. The price is above the moving averages, and so is the CCI. There's no divergence to worry about there. We do have this fair value gap down here, so that's a long-term play. Again, I don't trade these. I'm just looking at it as a potential area for a reversal. If price starts to dump, that'll probably be an area it might reach. On the weekly, likewise bullish with the CCI above the moving average, and so is the price. Again, notice we've got these fair value gaps here. I highlighted that previously. We've got another one, a fresh one up there that could be hit in the coming days or even weeks. Again, I don't trade based on that. I trade primarily with the CCI moving above the moving averages and the price. These other fair value gaps have been penetrated. So bullish momentum on the weekly. There's no divergence there. On the daily, we did have this bearish divergence, and that's still a bearish divergence, although the price has risen slightly. And again, notice on the daily, we've got a fair value gap, and that will be hit once this bearish divergence, I'm going to delete, that was a previous target for the divergence, and that's going to be readjusted slightly. Going back from that point, we take it back to that significant low, and that also aligns with these moving averages. So that's a 23-38% range. We can expect the target on this divergence to break down. So at the moment, the CCI is still dropping, and the price will very likely drop through that fair value gap, then eventually into this divergence target. First off, on the hourly chart, again looking at the divergence first off, we've got a bearish divergence there. Very easy to spot that one. And again, if that was to fall at the minimum, let's take it back to this low there. That'll be the 23-38% range we can expect it to hit when it starts. You can see there the CCI is still dropping. Also the CCI is dropping on the daily as well, so not looking good at the moment to go long. I'd be if you're waiting to go long, I'd like to see these break outside of these divergence ranges and create new highs. At the moment, stand clear unless you want to go short on silver. The back test first off before we go there. Let's go to the long position. So you would have taken long positions here. What I've done, I've taken it from the 16th of April back at this period when the price broke above the moving average, and so did the CCI. The stop loss approach has generated about 6,300 in revenue. A few ups and downs there in terms of taking your profits. And the average down approach, you would have averaged down a few times, but mostly positive. That's generated 129,000 with our baseline of 100, so 129,900 using the average down approach, trading the $10 contract. And lastly, looking at US crude on the monthly, it's bearish momentum, although making a bit of an upswing at the moment, current month, but still below the moving averages, so taking bearish momentum only. Although notice we've got a fair value gap up here, and that could be a sign of things to come in the coming months or even years, so it's a very long-term play. We've got a neutral position on both the price and the CCI moving averages in those ranges. That fair value gap has been filled. This one's been filled as well, and we've got another small one there that hasn't been filled, so that could likely break further to the downside in the coming weeks or even days. On the daily, that's actually bearish with the CCI and the price below the moving averages. Notice we've got this massive fair value gap up here with unfilled orders, so we may see a price rise in the near term, so just be aware of that. Although we don't trade on that alone, we use these moving averages, as I said, and the CCI to trade. Going to the 1 hour chart before we go to the back test, let's look at the naked chart. So what we're looking for here is we had a couple of bearish divergence back here. They've already actioned out, so that's all cool. And here we've got pretty much the price and the CCI moving in alignment. So at the moment, bullish momentum on the 1 hour, although it's breaking further to the downside. So wait for that to break below the moving averages to take further short positions in alignment with the daily being short. Now, in terms of the back test, would have taken long positions, and that started back around the 12th of May when this period back here on the daily, when the price and the CCI broke above the moving averages. The stop loss approach has generated 6,800, and the average down approach has generated 62,400 approximately. Now again, notice here we had a big drawdown on the average down approach, and to avoid that, always pay attention to these divergence. You can see there was a bearish divergence there, and as soon as you notice that first bearish divergence, you would have got out of the trade without entering into more long positions. It did rise initially there, but again, and also pay attention to the daily as well. You can see there at the very latest, you would have got out on the daily breaking into that CCI there, and that would have maybe you would have held at one contract there, but you would have avoided that drawdown, and then wait for the price to break above on the daily to take further long positions, and that would have been around this period back here, once that CCI settled against all the divergence. So make sure you hit that like and subscribe button to support the channel, and also don't forget to reference the +1 videos where we cover various strategies and do a deeper dive. Thanks for watching, and see you in our next video.